Hello friends, welcome to this session 6. It's a short session. I want to cover one aspect of ledger setup that I mentioned in my earlier video. I'll quickly cover that as well. So as I mentioned earlier, this is a ABI is my legal entity for showing this demo, and I will show you once more, critical aspects as part of the ledger setup that I said I'll come back to this a little later. Okay, now this is what I mentioned about. So this is a session on a currency revaluation tab. Basically, it's a realized gain, realized loss, realized unrealized gain, unrealized loss. What is meant by realized gain? Before getting there, let me pick this from a chart of accounts. Okay, as I showed in my chart of accounts, it's already imported. Let me press the edit mode here, and then let me see. I have this structure here. Okay, I have this account entry already imported. I'm going to use this for both gain and loss. And for unrealized, I'm going to use a different account, and this is 310070. I'm going to use the same for gain and loss as well. Okay, so this is very important when your legal entity is handling multi-currency transactions. Okay, now in my case it is also applicable, as I'm going to transact with INR, I'm going to transact with USD and Euro, because I'm going to now do some cross transactions across legal entities. I will have the necessity to have this information captured here. Okay, so let me explain you why this is needed and what does it mean. Okay, I'll quickly show you a different now slide here, and I will show the okay, a PPT slide that explains what those 4 accounts are. What is realized gain? So the definition for that is it's a financial profit. I'm sorry about that. It has to be removed. It's financial profit earned from a completed foreign currency transaction. So when does it occur? So let's say when we have now received the payment from for an invoice, and when the invoice is settled, meaning that it has been paid and the exchange rate has moved in our favor. Okay, since when the invoice was first recorded. Okay, example, your invoice a customer for you invoiced a customer for $100 when the dollar rate was $1 equal to 80 INR, which means it is 8,000 INR now. So when the customer pays you the same $100, at that point in time, my Indian rupee value has become $1 equal to 82 INR. Okay, so there's a gain of 200 INR here, as you see here. So you record a realized gain of 200 INR. So where I'm going to record this in the account code called 310060, if I recollect. Okay, So who will do this? This will be done when you close the books on a monthly basis. Okay. So this is the reason this account has to be captured in my ledger setup. Okay. And similarly for realized loss, I should be reading realized loss here. Let me change this soon. So it's actually a realized loss here. Sorry about that. And this is actually a loss incurred from a completed foreign currency transaction. Again, when does it happen? So when an invoice is paid and the exchange rate has moved against our favor, you get this scenario. For example, use the same $100 invoice, which is equivalent to 8,000 INR when it was invoiced. But when the customer pays it, okay, $1 drops to 78 INR. So it means that instead of 8,000 INR, I'm going to get only 7,800 INR. So here I have realized the loss of 200 INR. Okay. So similarly, there is a account code. If you want, you can use a different account code. But for my scenario, I used the same account for realized gain and realized loss. Okay. And then the next part is unrealized. What is unrealized? Unrealized is nothing, something which is not at now when the event has not happened. It means that it is still on paper. What do you mean by paper? It is an unpaid transaction or unpaid foreign currency transaction. So when you actually run your books by end of month, you should be booking, okay, how many dollar values are due from my customers, how many dollar values of how many dollar values I owe to my vendors. So these are all the processes which is done as part of month and activity. Okay. Now we look at this. When does this unrealized gain happen? When you run a foreign currency re-evaluation at the end of the month for unpaid invoices or bank accounts, and the current rate is favorable, you get a unrealized gain. But note that it is not yet realized, meaning that it is still on paper. Today, the customer owes you or you owe the vendor. And today the dollar value and INR exchange rate has changed. But every month you have to book your accounts. Now that's a procedure. In an ERP, you should maintain your books intact every month. When you are dealing with foreign currency transactions, you should run the foreign currency revaluation at the end of the period. So what I do is when you run this, you have a $100 unpaid invoice, which was initially recorded at INR 80, which is 8,000 INR. But at the end of month, let's say May 2026, the rate is 83. And what has happened is there is an increase of 300 INR here, because my invoice was in dollars. It was when it was raised or when it was posted, it was 8,000 INR. But today, even though it has not been paid by the customer, my dollar value has changed with respect to, the INR value has changed with respect to the dollar. So I get a INR of 8,300 for the same $100. Now, though it's a temporary status, but you book it under unrealized transaction. So here the gain is 300 Indian rupees. But note that it is still not paid. So this gain is only until the invoice is paid. Okay. Now similarly, the loss situation occurs. What is that? It is again on paper. This is a negative, the reverse scenario of the gain. Here what happens is the Indian rupees value has dropped down against dollar. $100, it is now 7,700 INR. Now here I record a loss of 300. So this is the um, reason we need to add these 4 accounts in the ledger setup. Okay, so now let me go back to my finance and operations page, and quickly now see if that makes sense here. Now that I have given the same account for realized gain and loss, unrealized gain and loss, there is a different account number. This is used by the application when you run the revaluation, currency revaluation, or a month-end activity. Okay, so I just wanted to share this as a short video. I hope this was useful now, and I hope you are able to relate to what is realized gain and what is unrealized gain. And see you soon in the next video. We are going to see more of accounting transactions. I'll try to cover as much as possible and try to explain why we need now the double accounting entries, which I'll be covering up when I go to a purchase order posting and sales order posting, and many more transactions similar. Okay, thank you so much. See you soon. Again, please provide your feedback. Stay tuned. Thank you. Bye.